Hey, what's up, you guys? True Trader FX here, back with another video. So, on this one, as we did mention in the previous videos, that we were going to cover the basics of smart money concepts, right? So, right now, what we're going to do, or the purpose of this video, is just for us to do an overview of the basic smart money concepts, right? You can refer to them as more advanced if you are still a beginner, but I still refer to them as basics because those are some of the fundamental things that you need to understand when you're learning smart money. So, yeah, let's start. So, the first thing that we are going to cover is the POIs, and I'm going to mention what each of these topics about the basics of smart money concept will help you with when you're trading, right? So fine. With regards to POIs, which are commonly referred to as points of interest, right? It's basically the supply and demand levels that you have in the market. So a supply area is an area whereby you had a buy to sell, and that's basically an implication that you had an up move and then a down move. Then the candle, which was the last candle to make the up move, that's your supply zone, right? So I made a bit of a mistake here. Sorry about that. Let's see if we can be where we were. Let me try and zoom out. Yeah. So that's basically what a supply candle is. You have an up move and then you have a down move after this up move. So basically what people are implying is that you had a buy and then you had an aggressive sell. That's why it's referred to, in other words, as a buy to sell zone, right? So you'd be interested in looking for a trade somewhere around these levels, around the low of the last up candle before the down move. But then in a demand zone, that's where you have a sell to buy, where you had the last down candle and then you had an aggressive up move following that down candle. So making the open of that down candle the area whereby you'll be interested in. So basically the purpose of the POIs is for you to be able to know where you're going to be buying or selling from. So supply zones are there to help you to take trades in a sell direction, and then demand levels are there to assist you in taking trades in a bullish scenario. So basically these are more focused on your entries, but we can also refer to them as topics which help us find direction in the market. Because if this is on a higher time frame, you'd know that you still have an area to trade towards, right? So that means that it also assists you in finding direction in the market. But that's what we are going to cover on other lessons as well. So what we also have here is imbalances, right? And this is basically not a complete video for all these topics here. It's just a bit of a breakdown as to what we're going to cover. So let's say you had a down move, right? Had a down move, and then after that you had an up move, which has shown a bit of volatility, right? And then from there, after the closure of that bullish move, you got a bit of a down move here, and then you then got a continuation in the other direction, in the bullish direction, right? So your imbalances or your fair value gaps or your IPA is going to be from the open of the down candle, right? This one, to after this candle trades above this previous down candle, it makes a high and then it closes, another candle opens, and then we're going to see whether the body of this candle has wicks or not within it. So if it doesn't have wicks, then this is how we're going to highlight the imbalance, right? The imbalance is going to be this gap right here. But if we did have a bit of wicks, around this level, whereby this down candle traded within this previous up candle and then made this low and then closed here. We're going to mark the imbalance to this wick, right? So our anticipation with imbalances is that, fine, we have this demand level, right? The demand level helps us to be able to take trades, right? And then the imbalances are there to show us that there is an area in the market whereby the liquidity is not balanced, right? Meaning that only one side was offered, right? Which is the buy side. So we need sell side. So our anticipation would be that we'd want to see price trading within this imbalance to close this area, so that we can have an area in the market whereby the buy side and the sell side is offered. So in this sense, we'd anticipate price coming back here later on, as long as we do find a reason to see price trading here. And then from here, we'd expect an up move based on this demand level that we just discussed. So yeah, that's an imbalance in a nutshell. So if you didn't have this up move, you'd anticipate price trading a bit lower to close this imbalance, and then from there you would have expected your up move to unfold, and then this would be a balanced market. So another topic which we have, which is liquidity. So everything here is based on direction most of the time. So once you get good at this, finding direction will be easy for you. So being in a position whereby you participate in a trade that's counter trend will be rare, because you'll be good at finding direction once you start understanding each of these topics individually. So another thing that we have here as liquidity pools, right, where we have equal highs. We have an area in the market whereby the market trades higher, it makes a high, here, and then we have it trading into this demand zone, right? And then from there it makes a bit of a retracement, and then what it leaves behind is equal highs, right? So equal highs in the market, what they imply is that it's basically just retail logic, whereby you have equal highs, where most people would expect it to form a double top, where they would easily sell and they would have their stop losses above. So since all we have that bit of knowledge about equal highs, it means that we would assume that we have liquidity above here. We have people who did take sells here, and then we would want to see the market run up to take the stops of the people who did take the sells, so that the up move can continue. But we'll touch more on these topics later on when we are going to break them down individually. So right now we're just doing an overview of everything that we have here in front of us. So yeah, with that said, I'll see you guys on another video. Peace.